I'm Charlotte McLeod with the Investing News Network, and here today with me is Gerardo Del Real, co-owner of Digest Publishing. Thank you so much for being here online with me again.
Charlotte, thank you so much for having me. I'm looking forward to seeing you in person again. We just recently got back from the New Orleans conference. You and the staff was missed, but hopefully we catch up soon. And thank you again for the opportunity.
Yeah, of course, and hoping to be back out in doing events in 2021. Fingers crossed. So today, though, we're going to catch up on uranium and gold, and starting out first with uranium. So since we last spoke, there's been so much going on in the market, and we're at a really interesting time, even right now this week, because we have the United Nations Climate Conference coming up. So I'm going to start there with that kind of topical news, because I know some people are hoping that uranium will get some time in the spotlight there. What do you see coming? Do you think we'll see any major conversations there?
I think the time for uranium was a couple of months ago. And though I think it's early, we were fortunate enough, Nick and I were fortunate enough to really have our finger on the pulse of kind of the trajectory of where the sector was headed and some of the catalysts that were going to get it there. And so when Sprott decided to announce that it was basically coming into the market and was going to start gobbling up pounds and taking them off the market. And when that coincided with companies raising cash to also go into the market and start buying, taking pounds from the spot market, you could see that was going to take the price from 30 to 35 to 40 to 45. Now, a lot of the companies that Nick and I recommended, they're up tenfold in the past 3 or 4 months from their 52-week lows. So there's a lot of investors and speculators that feel like they've missed that run. And so for those of you that are watching or are reading, it's very, very early stages. We are nowhere near where this uranium bull cycle is headed. If you want some predictions, because everyone loves predictions, right? I think that we're going to see within the next 12 to 18 months, brand new all-time highs in the uranium spot price. I think we could touch $200. And I think the very few quality names that exist, because there's not a lot of them out there, are going to absorb so much capital that valuations and rationale is going to go completely out the window. So exciting times in the uranium space. Yellowcake just announced they're raising $150 million. I could go on and on with the catalyst. Rick Rule has that famous line that it was a throwaway line for years. Either the spot price of uranium goes higher or the lights go off. And, in Germany, in Europe, in places around the world, that's actually the case right now. And so we haven't even seen the utility step from the sidelines and come back into the market yet. And we're already seeing uranium at 45, 46, 47, which obviously, sure, it's a lot higher than that $25, $30 the last time that you and I spoke, but it's nowhere near where it's going to go here in the interim.
Yeah, let's start to try to get to the bottom of some of these things here as best we can. So on the demand side, you mentioned we have utilities, they still need to buy. We've seen this year companies coming into the market to buy from the spot market. We have the Sprott Trust. And one recent piece of news that I haven't had the chance to discuss with people is the Kazatomprom news, what they're going to be doing. So let's try to break this down and make it understandable for people.
I'm a simple guy, so I'll just put it simply. I think it's Sprott 2.0, right? I think that companies and funds are figuring out that they can front run the utilities because it's a whole lot less consequential for the utilities to come in and pay $80, $90, $100 because the input to their bottom line is minimal. And so the utilities have no problem being asleep at the wheel, because they really ultimately don't really care whether they pay $60 or $100 when they start contracting these new long-term contracts, right? So use that to your advantage as a speculator and do some due diligence. Go to, if you want a free site, I'm going to shameless plug my own free site, resourcestockdigest.com, right? It's free, it's sponsor-based, it's a lot of very good information, some quality uranium names. INN has some quality exposure to some great uranium companies. It is early in this cycle, and there's a lot of money left to be made. You touched on the UN and the climate change goals, and this is one of the few commodities that actually has overwhelming bipartisan support in nearly every country. And it's not so much because the politicians got bright all of a sudden. It's because the supply demand fundamentals haven't really allowed for much of a choice. They had to come together on this issue. And so if we're going to get anywhere near those climate change goals, nuclear has to be a part of that equation. And there's several ways to profit from that.
Yeah, and the utility situation is very fascinating to me. I'm always so interested to hear in what they're doing, although it's really hard to explain because they're part of that opaqueness in the market. So I wonder if we can talk a little bit more about that and what we can expect moving forward and how that all fits in.
I think within the next 6 to 9 months, you're going to see the first utility or two come off the sidelines, write a check. It'll be at substantially higher prices because by then uranium will be substantially higher. And again, because for them, it's not very consequential. You as a speculator, you as the investor can use that to your advantage by positioning yourself in companies that are in good jurisdictions, that have qualified, successful management teams in the uranium space. Because the other thing that's going to happen is as capital comes in and uranium becomes the flavor of every month for the next 12 to 18 months, all the zinc companies will turn into uranium companies. All the gold companies will have a uranium spin out. And really, again, it's just execs mining your pockets, not really mining for uranium. It's a small pool of names that have quality management, quality assets, and are in good jurisdictions. Take advantage of that and start building out a quality portfolio for yourself because you're going to do very well with that.
Yeah, and as you kind of mentioned earlier, there's people who are looking at the market right now and they're feeling like, oh my goodness, I need to make a move. I need to get set up. But we also have people who've been in it for a while. They listen to people who were saying to pay attention, and they've seen some pretty big gains at this point. So for those two groups of investors, how should they both be approaching it? We've kind of touched on how to get into the market, but if you're already here, what should you maybe do differently?
I think the spot price will be the single most reliable indicator of where we are in the cycle, right? If we need $60 uranium just as a sustainable price, then at 45, at 46, it's pretty easy to tell that the price needs to head higher in order to incentivize new production. It's not coming online anywhere near below $60, right? And so I think when you see 1,000% run in a stock price, you can also anticipate a 30 or 40% correction before the next leg higher, and then another 30 to 40, maybe even a 50% correction. And so I would say define your risk tolerance as a speculator in the space and understand that, yes, there's a lot of money to be made, but also understand that that will come with pullbacks, and those pullbacks will be volatile because of the small nature of that space and how few quality names there are. When institutions come in and allocate capital to a company with a market cap of $300 million or $200 million, there's only so many institutions that are going to be able to do that without driving that valuation to $1 billion market cap, as an example, right? And whether it's justified or not, when you get that, that mania rise in the spot price that I think is going to happen, it won't make sense why a company that was $50 million just 9 months ago is a $750 million company. It doesn't have to. Just make money off of it. And when you're comfortable with your gains, hit the sell button. It's okay to sell stock. Nothing wrong with that, right?
Yeah, for sure, for sure.
Yeah.
Okay, so lots of exciting times going on in uranium. And one thing that I've been thinking about and asking people about is this cycle versus the last bull cycle in uranium, similarities and differences. What do you see there in that regard?
I think the biggest difference now is the demand. The demand part of the supply demand equation is so much more favorable than it was before, right? You had so many politically motivated shutdowns, whether we're talking Japan, Germany, and for various reasons. And these countries and these regions really box themselves into a corner where, again, as Rick Rule likes to say, either the price goes up or the lights go out. And that's literally happening right now. Countries and regions are having to make a decision about how they're going to keep the lights on, how they're going to keep the heat on. And so I think there's a significant difference in that aspect of it. I think the mania that's going to come into the uranium space will be very similar to the last time where, the spot price overshot to $145 from, I think, $11 or $12 as a base, right? It's a heck of a leap. I think we're going to see something similar to that this time around.
Okay, so looking very bright moving forward. I want to also check in with you on gold, which is maybe a little bit less of a happy story, at least at the moment. So we last had the chance to talk about a year ago. I can't believe it's been that long, but when we were speaking, you're telling us that we're in kind of a healthy pullback from last summer's all-time high. So how are you feeling about gold right now? What do you see?
I love the opportunity that the gold space is providing me as an investor and speculator to write checks for quality companies that are absolute no-brainers, right? And so I'll give you an example. We talked last year and I said the consolidation was healthy. I still believe that to be the case, right? We're within a couple of $100 of all-time highs on the spot price. The companies that I mentioned, I believe Magna Gold was one of them, right? It was trading near $1 Canadian the last time we spoke. Here we are a year later. It just delivered its best quarter ever production wise. And it's trading at the exact same level, despite the fact that it's now projected to make about 45 to 50 million in profits here in the next 12 months as they ramp up production to 80,000 ounces per year. So a company that has a market cap of approximately 70 to 75 million US is going to be generating in 2022, at the very least, 45 to 50 million dollars in profits. 45 to 50 million in profits. And so when I get the opportunity to buy that stock today at the same price that I bought it a year ago, and mind you, I helped finance the stock at 10 cents. I'm as eager to write a check today as I was when I wrote the check for 10 cents, right? When it was just a promise by the CEO, Arturo Bonillas, that he was going to roll in an asset, fix it, get it producing, optimize it, and then still stay active on the M&A trail. He's done all of those things beautifully. It's a pleasure for me to see the price at these levels, because in a couple of years, we'll look back and we'll listen to this interview and say, that was a no-brainer. That was easy. So yes, the gold price has been frustrating for a lot of the seasoned speculators that say inflation is here because it's not transitory. Budgets are out of control. Those aren't sustainable, but they're not slowing down either. Everything is materializing exactly the way that we all thought that it would. Where are the new all-time highs, and where is that excitement in the gold space? That is the opportunity. It's the same thing that I was saying to uranium speculators back in August, right? Use that weakness to buy those names at 52-week lows, because right now you don't really have to take a lot of exploration risks. There's companies like a Magna Gold that are producing, and also exploring, by the way, but are producing and are cash cows that you could just buy and hold and wait, because there will be a much higher gold price. I actually believe that we close the year out near new all-time highs. And I think Q1 of 2022, we're likely to see a breakout there. Could I be wrong by a month or two? Absolutely. I could be wrong for half a year, but it's coming and it'll be worth it. Just like the uranium initial run in the uranium stocks was worth it. This will be worth it as well.
Okay, and let's talk about some of those catalysts for gold. Like, how could we get to that level that you are anticipating in the end of the year or Q1 of next year?
I wrote a piece a couple of months ago saying nobody really knows what Black Swan event will happen to kind of trigger that next leg up, right? We know that fundamentally, even if a Black Swan event doesn't materialize, everything says higher gold price. The amount of dollars that are chasing any asset class, whether it's collectibles, NFTs, Michael Jordan sneakers, baseball cards, art, cars, you name it, right? Bitcoin, everything is pretty much at all-time highs with the exception of gold, which is flirting with all-time highs. We're only a couple of $100 away. Things don't have to happen in the order that we think they will. I think uranium caught a lot of people off guard. I think the gold price is going to rise substantially here in the next 6 to 12 months. And I think that's going to catch a lot of people off guard. So if you're a real contrarian, you buy when it's low, as long as the fundamentals look the way they look. With uranium, no brainer. With gold, also no brainer. It's not very complicated right now to pick some good names. And I think every name I picked last year has delivered beautifully as far as execution goes. Same price as a year ago, which is fine. Buy more.
Yeah, okay. I like that point that maybe things will not happen in the order that you expect them to, but they will happen. Just a little bit more on the
Yeah.
gold price. We're looking toward next week. There's a Fed meeting coming up. Do you think anything significant will come out of that?
No. I hate to be so direct.
Fair.
No, yeah, I think. Look, I think the Fed and the policymakers are so full of double talk that the credibility that the institution has lost, I don't know if it will ever gain it back, right? And so, bond markets decide when rates go up, not the Fed. It's kind of like the Wizard of Oz situation. It seems like every month they lose more and more credibility. I mean, they were buying and selling and trading in their own accounts, the same bonds that they were then going out and buying as an institution on behalf of the American people. If you tried it, if I tried it, we would be in prison. It's kind of criminal, right? So when you see the lack of credibility coming from that institution, I don't see that getting better. I don't see either the Biden administration or the other side really wanting any kind of compromise on the budget. They just argue over who should get the money, right? Because everybody wants their district to reap the benefits of $1 trillion budgets and deficits. And I don't see that slowing down anytime soon. So as long as we have this global race to the bottom, right? The fiat race to the bottom is kind of what we called it last time, right? It's going to be a whole heck of a lot of dollars and yen and currency chasing a finite amount of goods. And so it's why copper has done so well. It's why uranium will continue to do well. It's why gold will do very well. Everywhere I go, there's shortages, whether it's a labor shortage or a supply shortage. Some of it is bottlenecks due to, COVID related issues. Some of it is just inflation, manifesting itself in a way that Team Transitory thought would only last for a couple of months. And here we are, everything all-time highs, right?
Exactly. And, speaking about the Fed and credibility, inflation is one thing that's really wrapped up in there. And I hear a lot about that in regard to gold. But one thing I'm interested to learn more about and hear your thoughts is the impact of inflation on the mining companies themselves. Is that something we should be watching and be aware of right now?
I think you should choose wisely in how you construct your basket of companies that you want to speculate on. And what I mean by that is if you're speculating in producers, you really want to have a really good handle on the cost inputs and what could go wrong. Silver companies in particular, silver producers are so price sensitive. It's why when silver, surges, the companies just outperform by many multiples, but it's also why silver's down a couple of dollars. Trouble happens quickly. And so I would say just be careful if you're buying producers in understanding the cash structure, where the profit comes from. If you're buying a copper gold producer, you want to make sure you understand how much of it is coming from the copper side, the gold side, the byproduct side, and just the sensitivity there. And, that requires a little bit more research than the average speculator is willing to actually do, right? Because it's tough. But again, use the sources that are available and lean on people that have the experience to kind of flesh those out.
Yeah, and I also wondered on the junior side, there's companies that have done their economic studies in previous years and they're working on moving forward. For investors who are now seeing all these calls about inflation and what's going on, do they also have to worry about whether those numbers that companies have put out may need to be adjusted in the future? What do you think there?
Absolutely. Because again, I don't fall in the camp that inflation is transitory. I think it's here. What was the Fed word, the most recent one? More persistent than it thought, right? And so, sure, it's going to be persistent for years on end. And so, yes, mining companies are going to have to reevaluate what those input costs are and where their major sensitivity is. And speculators and investors are going to have to do their due diligence if they choose to speculate on the producers. I like the earlier stage companies. I tend to gravitate more towards the explorers, some developers, a producer or two like a Magna Gold that gives me good exploration exposure, but also gives me a strong production profile that's mostly driven by gold sales, right? I can look at that very meticulously and see exactly what to expect here for 2022, regardless of what happens to, the price of fuel or, drilling cost or, all the many inputs that go into a mining operation. But, it's different for everyone. I would say, ask people that have done this before, ask people that know what to look at, and write in if anybody that wants to write in, if you have a question, if I can't answer it, I'm happy to point you to people that can.
Yeah, okay. So it sounds like tricky situation right now, but there are for sure opportunities. What words would you leave investors with as we kind of head toward the last couple of months of the year?
This is not the time to do nothing, right? Keith McCullough from Hedgeye has a great Twitter handle on Twitter. He's a great follow, and on certain days he'll just tweet, "This was not a day to do nothing." Well, I would say for speculators in the resource space, almost everything is near or at 52-week highs, and almost everything's at all-time highs. There is so much opportunity out there. This is not the time to do nothing. It's the time to be doing your homework, speculating with your capital, putting it to work for you, because I think the next several years have the potential to provide generational gains to people that are persistent, to use the Fed's word, and are able to allocate capital in a way that's comfortable to them. And that's different for everybody. There's a lot of money to be made in these next couple of years.
Okay, well, that sounds definitely like a good place to leave it. Thank you so much for coming to share your thoughts.
Charlotte, thank you for having me. Always a pleasure. Hopefully we see you in person soon.
Fingers crossed. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Gerardo Del Real with Digest Publishing.